Let's just address BFSI, right, which Jay was also talking about. Banks continue to power higher. Abhishek is here. The big earnings that we got over the weekend. Abhishek.
Well, to begin with, the surprising factor in banking results over the weekend was the movement in net interest margin, which was expected to come down, but it has actually improved despite the fact that we have seen a robust deposit momentum for some of the lenders. So interest rates have started to decline from Feb of 25 onwards by RBI. However, the surprise factor has come in from growth in deposits, which has come in at lower cost for the banks. So if you take a look, all the lenders who have reported numbers, that is HDFC Bank, ICICI Bank, as well as Yes Bank, they have seen their interest expense grow way lower than the overall deposit growth in their banks, respectively, on a sequential basis, that is quarter on quarter. Take a look, HDFC Bank and ICICI Bank having grown their deposit base by 5.9% and Yes Bank by 2.6%. However, the interest expense has grown at a very marginal rate for HDFC Bank at 0.1%, ICICI Bank at 1.5%. In fact, Yes Bank has seen a decline in their interest expenses by 4.7%. So some part of it has to do with the fact that after a long time, low-cost deposit share or the CASA ratio for these banks have actually improved. So HDFC Bank, ICICI Bank and Yes Bank, all of them have seen improvement in their CASA ratio, which has actually aided in controlling their cost of funds. So this has also helped the net interest margin of the lenders to improve on a sequential basis, while the expectation was that, high interest rate, high cost deposits will actually, impact their net interest margin on negative side. So if you remove the one-offs also from HDFC Bank as well as ICICI Bank, the net interest margin has actually held up really well for them on a sequential basis. Now, net interest margin was also led by the fact that quarterly annualized slippage ratio has improved for all the lenders. Hence, their asset quality also saw an improvement on a sequential basis, which has actually helped the yield to remain at better levels than expectations. As a result, there was improvement in net interest margin, and in fact the impact was a lower credit cost on a sequential basis. These two factors help the return ratios improve for all these lenders on a sequential basis. ICICI Bank, if you take a look, the 2.5% ROA quarterly that you are seeing for them in Q4 FY25 is the highest ever quarterly ROA that they have recorded. So for banking sector, the valuations do come in from return ratios improvement. So large banks like HDFC Bank, ICICI Bank and Kotak Mahindra Bank are trading at a price to book value 1 year forward basis between 2.6 to 2.8 times. SBI is trading at a price to book value of 1.5 times. X of SBI, the PSU banks are largely trading at a book value, price to book value of 0.8 to 0.9 times. IndusInd Bank is the cheapest private sector bank amongst the large caps. Back to you.
Thank you very much for that.